In a world where most financial systems are built on borrowing, speculation, and paper profits, there remains a cleaner, more stable way to grow wealth, one that focuses on ownership, fairness, and real economic value. This investment strategy avoids debt-based profits entirely. It replaces interest-driven transactions with genuine participation, where money works through productive effort and shared benefit, not through lending or exploitation. This approach is both ethically strong and financially sound, designed for people who want to build lasting wealth without compromising their values. The foundation of this strategy is simple. Invest only in activities that create something real and valuable. Every unit of capital must be tied to productive output, whether that means owning part of a business, funding a construction project, or supporting trade in physical goods. When wealth is earned through productive exchange, it becomes clean wealth. When profit comes from lending money for guaranteed return, it turns into something artificial, detached from real contribution. The clean investor chooses ownership, not debt. The principle behind avoiding debt-based profit is fairness. In conventional systems, one party may profit regardless of the other's outcome. A lender receives interest even if the borrower suffers a loss. This imbalance is what makes the system fragile and unjust. Ethical investing removes that imbalance by ensuring that both sides share in the result. If there is profit, both benefit. If there is loss, both share it. That is what makes this method not only fair, but also sustainable in the long run. This investment philosophy thrives on partnership and transparency. The investor becomes a participant in value creation, not an observer waiting for returns. For example, rather than putting money in an account that grows through interest, a person can invest in a business venture that manufactures useful goods, provides services, or develops technology that benefits society. Such ventures produce tangible outcomes. Their success generates lawful income for all who are involved. Clean investing also means staying away from speculation. Quick trades, risky derivatives, or gambling-like exchanges do not create real value. They only shift wealth from one pocket to another. Ethical investors avoid these traps by focusing on long-term ownership. The goal is not to make fast profits, but to build enduring assets. Whether it's farmland that grows crops, a small company that creates products, or a real estate project developed through fair partnership, the investor earns by supporting genuine productivity. In this model, capital becomes a means of service, not control. Instead of burdening others with repayment, it empowers them to create. Imagine a craftsman who needs funds to expand his workshop. Instead of taking a loan with fixed interest, he can form a partnership where investors share both risk and reward. If his business prospers, everyone gains proportionally. If it struggles, everyone shares the loss. This shared outcome creates trust and discourages greed. It turns finance into cooperation, not competition. Another key principle is transparency in business. Every investor should know where their money goes, how it is used, and how profits are generated. Hidden clauses, complicated contracts, or uncertain income sources are red flags. Clean investment requires clarity at every step. The more transparent the agreement, the purer the income. Ethical investors ask, is this wealth coming from real trade or from the promise of interest? If the answer is trade, it is lawful. If the answer is interest, it must be avoided. Education plays a vital role in this approach. Many people enter financial markets without understanding where their returns truly come from. They see profit numbers but overlook the source. The ethical investor studies carefully, reads financial statements, and understands the business model. When the mind is trained to see beyond numbers, it becomes easy to separate clean income from doubtful income. This awareness transforms the way people manage money, guiding them toward choices that bring both financial and moral satisfaction. Another advantage of avoiding debt-based profits is the peace of mind it brings. Debt often causes stress, anxiety, and dependency. When income depends on fairness, the investor no longer fears collapse caused by others' inability to pay. Profit from ownership and partnership may come more slowly, but it is steady, responsible, and pure. Clean money carries blessings that borrowed money never can. Over time, it brings stability to families, businesses, and societies. In practical terms, there are many ways to apply this strategy. One can invest in equity of ethical companies that provide essential goods like food, clothing, housing, or technology that improves human life. One can support cooperative businesses where profits are distributed based on actual performance, not guaranteed payments. Real estate projects can be developed through shared ownership rather than loans. Trade ventures can be financed through joint agreements where each side contributes, one with capital and the other with effort. These structures allow growth without interest, enabling people to earn honorably while keeping their conscience clean. This approach also aligns with social responsibility. When investors focus on clean, productive businesses, they help strengthen the real economy. Factories open, employees are hired, and communities grow. Ethical investors do not chase digital illusions. They create tangible impact. Their capital builds, supports, and uplifts. Over time, this creates a cycle of mutual benefit, where wealth is not concentrated in a few hands, but shared through honest trade. Finally, this debt-free investment strategy reflects a deeper truth. Real prosperity comes from value creation, not from taking advantage of others. It teaches patience, discipline, and long-term vision. It reminds investors that money is a tool to serve humanity, not to enslave it. Those who follow this path not only build wealth but also inner peace. Their success is rooted in fairness. Their profits come from real effort, and their hearts remain unburdened by guilt or exploitation. In the modern world, where credit cards, loans, and interest-driven products dominate, following a debt-free path might seem challenging, yet it is entirely possible and increasingly necessary. Ethical investors around the world are already proving that wealth without debt is not only realistic, but more stable. Their businesses grow slower, but they grow stronger. Their gains may take time, but they last longer. They show that financial success built on fairness and real ownership is not just a theory. It is a working model for the future. Clean investment is not about avoiding modern tools. It is about using them responsibly. It allows technology, markets, and innovation to serve humanity instead of trapping it in endless debt. When guided by integrity, finance becomes a force for good. And that is the essence of this strategy: to earn without exploitation, to grow without harming others, and to achieve prosperity through honesty, effort, and real contribution. In the path of ethical investing, the most important rule is to create real value through genuine effort and ownership rather than earning money from money itself. The goal is to avoid every form of debt, interest, or speculation that separates wealth from real productivity. A truly ethical investor focuses on trade, partnership, and contribution, the same values that build stable and fair economies. When a person chooses to avoid debt-based systems, it requires patience and discipline. In the modern world, almost everything seems built around loans, credit, and leverage, but the one who wishes to stay pure in income and avoid debt must take a different approach, a path that values transparency, fairness, and shared responsibility. This form of investing may seem slow in the beginning, but it brings stability, real ownership, and peace of mind in the long run. The foundation of this approach lies in the principle that profit must come with risk and responsibility. When two people agree to invest together, both should have a fair chance of profit and loss. One cannot guarantee fixed profit without sharing the risk because that would turn the transaction into an unfair exchange. In ethical investing, risk and reward are shared equally. This creates balance, justice, and honesty between people. A common way people apply this idea is through partnerships where one provides money and another provides skill or labor. For example, if someone has funds to buy property or equipment, but not the time or experience to manage it, they can partner with another person who can handle operations. Both agree on a profit ratio in advance, and earnings are distributed accordingly. There is no guaranteed profit, only shared success. If the venture fails, both share the loss fairly. In the real estate world, this system can work beautifully without any mortgage or bank loan. Instead of borrowing money, people can create small cooperative investment groups. Each member contributes funds, and together they buy and develop property. The profit is then divided according to contribution. This avoids the burden of interest-based loans and creates opportunities for collective growth. Another ethical method is leasing. An investor can buy a property, car, or equipment and lease it to someone who needs it for business. The owner earns lawful rental income, not interest. The agreement is based on usage, not on time-based gain without effort. Ownership stays with the investor, while the lessee benefits from the use. Both sides gain fairly, and the deal remains tied to a real asset. Cooperative businesses also play a powerful role in ethical finance. When people form a cooperative, they all invest in a shared business such as a farm, shop, or production unit. Every investor becomes a shareholder. There is no debt, only mutual participation. Profits are shared, and every member benefits from the growth of the business. This model builds community wealth and avoids individual exploitation. In the modern era, there are also companies that operate ethically by keeping their businesses away from gambling, alcohol, interest, and speculative industries. Investors can buy shares in such companies, ensuring that their money supports only permissible and productive work. This allows growth in wealth while maintaining moral integrity. The biggest transformation in debt-free investing happens in the mind. Society teaches people to chase quick profits and guaranteed returns. But ethical investors understand that quick profit often hides risk or injustice. Instead, they seek long-term growth based on patience and real effort. They prefer slow, stable progress over fast but uncertain gain. This mindset shift brings peace and satisfaction. In this journey, knowledge becomes the most valuable tool. A person must study the basics of business, understand contracts, and know how to evaluate opportunities. When an investor learns how to identify real value, a shop, farm, property, or product, they no longer fall into the traps of speculation or interest-based schemes. Education is the shield that protects ethical investors from deceptive systems. Imagine a person who has saved $10,000 and wants to invest ethically. Instead of placing it in a bank for interest, they might partner with a friend who owns a small workshop. They agree that one will invest capital while the other manages the work. Both will share profits at a fixed ratio. Another portion of the money can be used to buy a delivery vehicle and lease it to a local business, generating lawful rent. The rest could go into purchasing agricultural land that produces organic crops for sale. This person's investment is completely tied to real assets and real effort. There is no borrowing, no hidden interest, and no guaranteed profit. Success depends on how well the ventures perform, ensuring fairness for all parties. Even if one project fails, the investor still owns valuable assets and retains dignity without debt pressure. The benefits of this system go beyond financial gain. It creates emotional comfort, as there is no fear of repayment deadlines or compounding debt. The investor feels secure knowing that their income is clean, transparent, and earned through lawful trade. Financially, real assets like property or equipment hold steady value, unlike paper-based investments that can disappear in a market crash. Such investing also helps society. When people invest ethically, they support real workers, small businesses, and community development. The money circulates in productive hands instead of going into banks that profit from interest. It builds an economy that values people, not just numbers. However, caution is necessary because not every ethical label truly means fair. Some companies hide interest or guarantee profits under fancy names. Therefore, investors must carefully read contracts and ensure that there is shared risk, no hidden clauses, and full transparency. Any system that offers profit without risk or connects money to money is not ethical, even if the words used sound safe. Speculative trading, gambling-based markets, and interest-bearing deposits are examples of prohibited models. They create wealth from uncertainty or from the loss of others. Real investing, on the other hand, builds value by producing goods, offering services, or creating useful assets. Technology can make ethical investing easier. Many online platforms now connect investors with businesses that work transparently and without loans. Blockchain systems allow every transaction to be recorded clearly, ensuring no deception. Crowdfunding for ethical startups or community projects is also possible, letting many small investors participate in large ventures without debt. To begin this path, an investor must first clean their income sources. Any income generated through interest or unethical means should be stopped. Then, they can set clear goals, whether to grow wealth, support community development, or create a stable family income. The next step is research, learning about different markets, studying risks, and understanding legal obligations. Starting small is always better. Even a small but fair investment is more valuable than a large but uncertain one. Gradually, with experience and patience, investments can grow. Diversification across real sectors, agriculture, trade, technology, and real estate provides balance and protection. Over time, consistency and sincerity bring true success. Debt-free investing is not just a financial system. It is a vision for a balanced world. It removes inequality, eliminates exploitation, and replaces greed with cooperation. It teaches that profit must come from real work and shared effort. not from another person's burden. This vision creates societies built on justice and shared prosperity. When investors earn through fair trade and lawful methods, their wealth becomes a source of blessing, not stress. They contribute to progress that uplifts others and themselves. The peace that comes from such income cannot be matched by the hollow excitement of risky or interest-based gains. In conclusion, avoiding debt-based profits is not only about rejecting interest, it is about redefining success. It means choosing fairness over speed, ownership over dependency, and contribution over speculation. It builds financial strength through ethics, patience, and knowledge. Such investing brings balance to life and harmony to society, creating wealth that truly benefits everyone.